What up, my devil? Sensei-tutum with another video for you. So this week we got another Ethereum Elliott Wave analysis video for you, and you actually haven't seen a count from me at this perspective, at this degree, since you've seen this count, since we had this count. And I don't know, a month or so ago, a month and a half, I don't know, we sort of pivoted away from this count, and I said that I would show you a new count soon. Why did we pivot away? Only because we decided that we were ever so inclined to say the bottom was in. I think at the time I just jokingly said 61.8%. Why? You know, that's the golden ratio. Certain that the bottom was in, but it was just basically to indicate that, you know, if there's a meter, you know, like that fear and greed index meter, you know, I don't know, temperature meter is 0. You know, I'm not biased one way or another, is right at the dead center top. You know, I was, you know, slightly to the bull side. But now I think I've circled slightly back to the bear side, and that's because of the current price action, right? You always have to be ready to pivot and turn based on what the chart is telling you. We're not, you know, we're trying to project probable outcomes, and you know, we don't have a crystal ball. You're going to be wrong a lot of the time, and I might be wrong right now to say that. But what I want to mainly talk about is that, yeah, you haven't seen the count because there wasn't. This one just makes so much sense, right? So I had not gone back and updated to once I told you that I was, you know, slightly in the bull column. And why were we in the bull column? Primarily because of the downtrend line break on this chart, and of course Ethereum as well, but this is the Bitcoin chart. But you know, Bitcoin is sort of the tide of the crypto market, right? And the historical relevance of this break and the way in which we broke it is not should not be ignored, right? Because in the entire history of Bitcoin, this happens, you're typically going to head to, you know, in short order onto all-time highs, you know, like, so this was an example, right, of just a significant downtrend break. Now, you do rarely just have another move down that would sort of double bottom, slightly take out a lower low, but not return to the downtrend line. But that doesn't happen as often, which is why I went to the slightly bullish side. But based on count, especially back on the chart that we're caring about, each chart should be analyzed on its own merit. We, you know, there wasn't anything that super fit bottoming here. And at the time that I did say, you know, I was slightly going to the bottom inside, you know, I said at that time that I would have liked to have gone down further. We didn't quite, you know, we tested the area of the low of the summer lows, which is sort of what I've been shooting for, the last summer lows, but we didn't do it, right? Like, we didn't quite get deep enough. It, you know, just adequate. It was just adequate. Well, looks like we may be going ahead and sticking with this count and returning to the summer lows. Now, why do I say that? Like, it's really easy. I'm sure this is not an I'm sure it's a popular idea right now, right, to have just put this, and I believe that that potentially is what's playing out, right, a triangle of some sort. But you have to be careful when you're doing that, because, you know, you can be, you're 50-50, right? So it's, you're getting this price contraction. It's going to break out hard one way or another when it does. And if you pick a side, you know, you have a 50-50 shot. You literally could get 10 of these in a row and have no fucking clue what you're doing, right? You're just seeing price contract and it's going to break out. I think it's mega important, especially at, you know, the positioning of the chart and the degree and all that, to sort of like think a little more about it than that. Oh, price is contracting, it's in the direction of the trend, you know, or price is going to break out in the direction of the trend is continuation pattern. That's easy. But if you look at these significant lows and really highs as well, there's funk, man. There's funk, right? And being able to identify that this is happening, and that this, you know, that this is going to break that way as opposed to that way, super important and profitable, right? It can be super and profitable, right? And it's really hard to do that from an Elliott Wave perspective at times. But if you know the right way to think about the theory and you've really studied your shit, you can sort of pick them out with relative probability. And that's actually a course, you know, Discord members, TradeDevils.com, they know that I do, you know, have a lot of trading material on there, and that's a course that is in the back pocket I'm working on putting together. identifying these, and then no, I shouldn't say I'm working on putting together. I haven't. I'm procrastinating on starting putting together a course that will help you identify these as, you know, this very situation. Is this going to continue to the downside or go to the upside? So let's go ahead and focus on that for the analysis part of this video. Is, you know, why do I think that this is going to break to the downside a little bit instead of break to the upside, right? Why isn't it like this or this? And first and foremost, let's go ahead and let's look at what I'm thinking the count might potentially be. This is what I'm going with. Let's go down to 1 hour. But two, you had this as an impulse. Yeah, and honestly, you notice that I did still end the A here. Oops, right? I still ended the A there. Why? You know, honestly, if you look at the subwave structure of what was the 3... It was a bit ugly and forced to begin with, right? And yeah, that just, here's what I think it is, to be honest now. Oops, that's not what I think it is at all, but let's go ahead. There we go. Small X. Small X, but makes guidelines, so we'll go with that. And why? So yeah, I'm still thinking that this is a truncation. It's just, instead of a truncated fifth wave, it's truncated zigzag. You know, you see you have the clear 5-way swing structure in here, the one, you know, the sideways style B, and then, you know, what appears to be an impulsive structure. So truncation on truncation. None of that, those ideas and the things that we discussed about the truncation has changed. It's just that, you know, and I said at the time that this was funky, and, you know, it seems that in retrospect, you know, and at the time, also at the time, we were looking, you know, the last, was it the last video I did? Because I took last week off with the stomach flu. Yeah, I think the last video we did, we said we were looking, I think it was the last video, we said we were looking to do this deep zigzag, right? That we, at the time, we were sort of getting around the low of this, and I said, you know, we might even been here, and this is really like a 3-3, you know, sideways style. B, that's what that is exactly. And with the C down to here. But basically, this is exactly what we were expecting. So either way, it sort of didn't work against you, right? And that's sort of the way that you should try to safely practice this theory. When I say that, you know, you're going to be wrong a lot. But if you can safely practice in that, you know, if you're wrong, the outcome is pretty much the same. You're sort of lucky. And then when I say that, that means when you're, you know, risking your money based on it, right? When you're just throwing charts together, who cares? But if you're actually risking money. So yeah, again, this is clear 1, 2. So I don't need to go through and show you guys this in detail. I know that that's what you guys like, but I don't like doing that. I don't like to focus on just counting, because there's so much more to this theory than just putting fucking labels on a chart that nobody seems to get. And I just don't want to focus on that part personally. Even though I know it's what sells. It's the sexy. Anyway, so we'll just go ahead and roll through this, because there's other important things to talk about here. Let me just throw this on here real quick. That, you know, and when you're getting this sort of price action, it actually comes super nice and easy to trade within, because you're just getting a lot of, you know, zigzags, and zigzags are one of the best things to trade. You're getting a lot of 3/C's type of trade. But, you know, if you're somebody that thinks that fifth wave trades, I know that there's former students of ours out there teaching our theory as their own, that endorse fifth wave trades as the best type of trade in Elliott. I think they're one of the worst. And yeah, you just don't understand much if that's what you preach. Okay, we'll stop there. But so that's that, and then we'll go ahead and hit the bigger. Oh, wait. Again, this is what everybody's showing. So this is what, but we just clearly went through counted swings. There's no, is there any skill involved in what I just did? No, not really. I mean, if you can count swings, you can count swings, which really, that's one of the beauties of Elliott Wave, is that if you, wait, is that supposed to be a 2? How'd you get there? Man, how many of you guys have been watching this so far, all the way to this point, seeing that 2 there, like, 2, what the fuck? Okay. I do that all the time in my videos. I'm sure you guys catch it and get tilted. Okay. Now, one of the things that I really like to use, basically, and I won't get into any detail on it, is Wyckoff in situations like these, for distribution or accumulation, redistribution, reaccumulation, things like that. It's a really deep theory, and that's another thing I got in my back pocket is a course I'm putting together on how I use, for the members, of course, how I use Wyckoff to assist, because it's not part of our, what I would call our pillars of analysis method. It's not part of the TDU methodology, right? Wyckoff. But I've been studying it just as long as Elliott Wave. I wouldn't say I'm nearly as proficient, but the way I use it is quite important. And actually, you know, I had said on Twitter that about another type of video I was going to do. I asked you guys what you wanted, and somebody suggested gold, and gold needed an update, so I did a gold update, and I got really deep in the Wyckoff stuff. So actually, the members, if you're a member, even the social level, that's like less than $2 a day, guys. You can go watch that video. That's actually a banger. And if you look at gold, it's played out exactly. But that's how I use Wyckoff. But using that, we'll just say the way I use that, we'll put that in the "this is going down" column. That's as far as I'll go with that. Then on as far as now. We want to basically, I think what's really important from the Wyckoff and the Elliott Wave perspective, when you're trying to analyze a pattern of this degree and try to figure out what it's going to do, is to take the volume into account. And sorry, should have warned you guys, but put your goggles on. I got the charts.cointrader.pro chart up here, which is cool because it's Ethereum against the dollar based on CoinMarketCap. Now, of course, you know, is CoinMarketCap legit? Not in the least, right? But it does, it's a conglomeration of all the, it's not the right word, it's all of the it's all of the volume together from the CoinMarketCap, so it's useful when you're trying to look at volume, right? And so in that regard, if we look here in an Elliott Wave perspective, what do we expect to happen in a correction is that the volume, and especially in a triangle, the volume should decline throughout the life of the triangle and get to its lowest peak at the peak of the triangle, i.e. the E. So we've got that going on, right? And of course you climax into the end of the wave 3, and now we've sort of steadily been, you know, obviously moving within, but the peaks are on the downtrend. Okay, so, and there's a lot to be said to get in deep here with the way I analyze volume and things like that, but just for the sake of the video, we're not going to get into that. So based on those sort of things, based on the continued 3 swing moves, you know, really looking at this, it really does feel better in this way. Now, another thing that I want to address, right, because all of these are simple zigzags before this. Now, you know, you always hear Sam talk about Elliott Wave purist. So this is purist. I'm speaking to you, and just so you know, I'm probably the greatest purist that you know of, right? Because I know, and by purist I mean like the EWI rules and guidelines, that type of purist, and because I know them really, really well. And so if you don't know them all, if you don't know every single intricate detail, you know, how could you be as pure? But that's I am. But there's a rule in triangles that there should only be one complex wave. Obviously, each subwave should consist of a zigzag or zigzag family style of correction, or a triangle subwave. And, you know, based on Elliott Wave International, and this is, you know, in our rules and guidelines, students, this is in our training material, and is that you can own that a multiple zigzag in a, and this is where, you know, rules and guidelines are really, really, really important. But when you get into the minutia and things like, you know, you're building a structure and things that is a little more fluid than that. But, you know, a better way to put it is that you know, the way that we phrase it, and this is a recent change, in not recent, but let's just say developed over years, because I always like to say I don't make up any of the shit that I'm doing. I always really emphasize that, but I do tweak very, very slightly. So, you know, after years of deep analysis of Elliott Wave and, you know, true application of rules and guidelines at every degree on every pattern, I have made this tweak. So I always do these long tangents, but basically the rule, as stated, is that any multiple zigzag will be considered a complex wave in a triangle, and therefore you should only be able to have one. Why are you focusing on that too? Well, because down here, I think that we might be getting a little more complexity, so we would have more complexity. But my tweak is that a simple multiple zigzag to me is a simple corrective, right? And, you know, if I'm going to just, and this rule that we have on our documentation is actually something, nobody probably knows this, but when we came up with the rules and guidelines that we put out, Elliott EWI doesn't have a great rule book, right? They're not really good at presenting their material. So for over the course of quite some time, we interacted with them and really nailed them down on the uncertain parts of their rules and guidelines. Really nailed them down and got them to answer, you know, things, maybe made them a little uncomfortable. And this is probably why, because they said that the multiple zigzag is always considered complex. And if you got to give an answer, I get it. Like, yeah, if I had to just tell somebody that, you know, I don't know their level of, let's say, ability to apply logic, or their level of comprehension on the theory, I would say that too. But for me, my small tweak is that if it's a simple, quite simple looking multiple zigzag, count it as simple. So really, I mean, such a minor tweak for me to just speak so long about it. But hey, it's important. I think it's super important, super relevant. So, you know, if you got something to, if you want to argue about it, DM me. We can have a video and talk about it, because I've been studying for years on, you know, I don't make these changes lightly, and I would love to debate about it, especially, you know, because maybe I'm wrong. You know, it's not something I talk to people about, because no one gets as deep, and, you know, I don't know of anybody that I can have a discussion with about this. Let's put it that way, because nobody gives a shit. So yeah, if you're interested in trying to debate me on that, give me a DM. So yeah, this is going to be complex wave, or simple wave, but a complex pattern, because I believe we might be having a E triangle playing out within the triangle. So we've got, you know, A, B, C, D, and I'm wondering if we don't have, you know, that is a zigzag there, but we'll just delete this. So if this is A, B, C, D, now, and do we potentially have another E triangle playing out within the E triangle? These are things that you can do. Oh wait, does that D take out the low? No, it doesn't. I don't know. This is not. I mean, I can get down in here and count, but maybe it's A, B, C, D, E, something like that. I don't know. But this is, you know, not something that I'm considering worth doing right now. But we're just continuing to just drain. Now, I should have said this way earlier. Full disclosure, and I tell members this all the time, I'm shit at triangles. I think probably most people are, even if, you know, but you get a 50-50 shot, and so you would think that I at least get half of them right. No, I suck at triangles. Once you're figuring out if we're in one, if we're not in one, when it's gonna end, I'm just not good at triangles. I'm great trading within triangles because you get these nice zigzags. Like, this is an environment I love to trade in. I haven't been trading that much the last couple of weeks, been busy, sick, all those things. So, oh yeah, I was just sorry to pause there. I was like, hold on, am I in a trade right now? No, I'm not. I was looking at one that I didn't end up taking. So yeah, I think that's where I'm at with that. Let's see. Yeah, and I could go on probably another 2 hours talking about the Wyckoff reasoning behind this, but basically, suffice to say, we're not putting any motives we're not putting any finished motives into the upside at all. The moves to the downside are, you know, pretty powerful. Not powerful, let's just say that that is the way that the trend seems that it wants to go. So I'll leave it at that without getting into too much more detail. We're already at 22 minutes. But yeah, so suffice to say, I haven't updated the count at this degree. The last time I told you that I would be at some point updating it, we thought that we would be changing it, but we're not. So now let's just, what does that mean then to, let's just, so. It's a funky triangle, so I don't know how good the PTT is going to steer us here, but basically, yeah, right down to the summer lows. Maybe knife through just a bit. Now, if I've still got any of you left, so we're targeting, again, we're going to target this area, right? We're going to look at when it breaks out the things, let's just say important things that will signify that it's going to turn. And everything's shaping up like it's going to be like that. It'll be a capitulation. It'll be scary, but it'll be quite the opportunity. And, you know, there's a lot of things I could talk about from the Wyckoff perspective on why that, you know, this supports being the last leg down. But let's just say Elliott Wave. If you know anything about triangles, you know that the next wave should be the last wave down as well, because of the way that the internal structure of this makes it a triangle, and we know the rules and guidelines of the theory. So that this breakout, this down, while scary, and, you know, should be, it can extend. Absolutely, they can extend, but it, you know, we should be, I wouldn't expect it. I'm not gonna say I would expect it. Well, maybe, I mean, shit, who knows, with the way that, you know, with the crypto in the eye of the federal regulators, and, you know, maybe it does extend, but you don't project for improbable expectation. It just, if it happens, then you're wrong, right? So you even if the probable expectation is only, like, you know, let's say, I don't know, just bear with me here. I'm getting on one of my other tangents, but let's just say the probable expectation, I'm doing air quotes, is really, you know, you can't really assign numbers, but let's say it's only like a 30% chance. That still could be the probable expectation, because the other 70% could be made up of so many different potential scenarios, right? So that's why you have to understand what we're trying to do here. Most people probably don't get that. You know, I hope somebody that's listening to this point is like, oh yeah, just because it's the probable expectation doesn't mean it is, you know, more probable than the other outcomes combined, right? It's just of all the individual outcomes, the most likely. Anyway. Oh shit. I wonder if this is just, this could also just be, sorry, I'm just looking at this before we go. That this could just be like a, I don't know. Let's just say there could be more complexity within here, but when we break out, kind of expect to break to the downside. And the easiest way to trade these things is to get the retrace retest of the trend line. I'd say it's the safest. It's not exactly one of the safest trades in the world to do, but when you're trading triangles and trying to get the external move, I think it's one of the safest ways. Yeah, so I feel like I've been very thorough here. I don't want to string this along, but I don't want to leave any information out for you guys. But yeah, we're 26 minutes. So, all right, boys, I think that's it for this week. I do think that we will probably, by the next video, maybe we'll have some interesting things to talk about. But just remember, this next leg down should be the last leg down. It can extend. It can extend and go way down. You know, all these people call for super low numbers all the fucking time. But it's just, you know, it's not what we expect. Just remember that. Just, you know, when you're really fucking scared and thinking about what to do, oh, should I sell my bags? Oh, should I buy here? Just fucking calm down and remember that what's happening is part of the plan. And then maybe next week we'll come back and I was totally fucking wrong. And I told you guys I suck at triangles and we're up here. So I don't know, but we'll see. All right, boys. I think that's it for this week. Toot out.